In this video, I want to talk about an investment concept that changed not just the way I think about managing my own portfolio, but also the mandates I manage on behalf of my clients.
We call this concept return stacking. If you haven't heard of it, you're in for a real treat. Let's get right into it.
So what is return stacking? Well, at its core, return stacking is the idea of layering one investment on top of another, giving you more than $1 of exposure for every dollar invested. What's important about this concept is that it has the opportunity to help you unlock the benefits of diversification in a more efficient and effective manner. Now, as it turns out, this is not a novel approach. This is something institutions have been doing for decades. Using capital-efficient derivatives like futures, swaps, and forwards, institutions were able to replace their core stock and bond exposure and allocate to alternative hedge fund strategies. So how does this work? Well, forwards, futures, and swaps give investors leverage. This means that the institutions were able to put out much less capital to get the exposure that they wanted, freeing up capital in their portfolios to invest elsewhere.
A really quick example here would be, say, some endowment wanted to have 100% exposure to the S&P 500. Well, instead of taking 100% of their cash and investing it in the S&P 500, they might be able to just put 10% aside as cash collateral to buy 100% exposure of an S&P 500 futures contract. Then with the remaining 90%, they can invest in, well, whatever they want. This is a really important concept because historically, investors have had to make an either-or decision. If you wanted to invest in alternative asset classes, you had to sell stock and bond exposure to make room in your portfolio for them. This concept of stacking returns on top of capital-efficient exposures is more of a yes-and approach, allowing you to maintain your core stock and bond allocation while overlaying the alternatives on top.
Unfortunately, this approach has long been out of reach for many investors who are unable or unwilling to manage derivatives programs. Today, however, a wide variety of mutual funds and ETFs have come to market that pre-package this concept into individual building blocks. Here at Return Stacked Portfolio Solutions, our mission is to provide the assembly instructions for those building blocks. Now, there are a couple big potential benefits to consider with this concept. The first is, by just adding more return streams to our portfolio, we have the opportunity to potentially enhance our long-term portfolio returns. But if we're thoughtful about the return streams that we choose, not only may we have the opportunity to enhance long-run returns, but we might actually also be able to reduce portfolio risk, reducing volatility, reducing drawdowns, and enhancing safe withdrawal rates for those in retirement.
Now, we certainly can't guarantee that, but it doesn't mean that we can't try our best to be considerate of the type of diversification that we're ultimately trying to unlock. One of the big potential benefits of this approach is actually behavioral. Again, historically, to add alternatives to a portfolio, we had to sell stock and bond exposure to make room. This was really hard to do in decades like the 2010s, when diversifiers like commodities, gold, alternative investment strategies like managed futures really struggled. Not only did our money go nowhere during that decade, but we had an opportunity cost of missing out on what stocks and bonds did. The return stacking concept allows us to layer those alternatives on top of stock and bond exposure, which means that we don't miss out on returns of stocks and bonds in a decade like the 2010s. And even if alternatives go sideways and provide middling returns, it's not that big a deal because you're stacking them on top.
One of the first questions we always get when talking about return stacking is, well, if you're stacking returns, aren't you also stacking risk? And I suspect a lot of this notion comes from the fact that concentrated leverage is pretty much at the center of every major Wall Street implosion over the last 100 years. So we just want to make one thing really clear. When we talk about return stacking, we think the benefits are there if we're thoughtful about those asset classes and exposures that we're stacking on top. What we really want to make sure is that the things we pick to add on top of our portfolio are designed to zig when our underlying portfolio is going to zag. At Return Stacked Portfolio Solutions, we offer a number of services and products to help investors get started on their return stacking journey. We offer mutual funds and ETFs that are the building blocks that can be used to implement return stacking. For financial advisors, we also offer model portfolios. These are turnkey portfolio solutions that are pre-designed to incorporate return stacking concepts and come in a variety of risk levels that can be custom tailored to different client outcomes and objectives. Now, these can be used as off-the-shelf solutions, or they can just be used as inspiration on your own journey of trying to understand how to implement return stacking. Finally, we're always happy to consult with advisors and institutions about how return stacking can be implemented in their portfolio.
What's important here is that return stacking is not just another buzzword. This is a strategic approach that has been used by institutions for decades. And we think this concept has the opportunity to significantly enhance outcomes for investors. Truly harnessing the power of return stacking means unlocking the benefits of diversification without sacrificing your core stock and bond exposure.
If you want to learn more, you can head over to returnstack.com, where you will find a list of our funds, model portfolios, as well as a research blog, all of which will be updating over time. You can also hit subscribe right here on this channel so you get notified anytime we post a new video all about return stacking. And if you have any questions, please feel free to comment or send us an email. We're here to help. Until next time, thank you for watching and happy stacking.